Hello, I'm Phil Svitek, 360 Creative Coach, and in this episode, I want to talk about investments, especially as it pertains to the coronavirus and so forth. So, first off, let me kind of say this. I, by no means, am a financial expert. In fact, a lot of the information that I'm pulling from comes from people such as Melody Hobson, Sallie Krawcheck, Ray Dalio, Tony Robbins, Money Master the Game, and Unshakable, Broke Millennial. And so I would strongly encourage you to check out those resources. In fact, Money Master the Game is a fantastic book for this. So definitely worth checking out, especially if you have this downtime. If you're lucky enough to have just downtime during this quarantine, that is a great resource. And, what I want to talk about today is this notion that, the economy is tanking and things like that. So first off, just based on kind of my experience and, in reading from these experts, the various books and so forth do not sell right now. I know people are thinking, oh, I have a lot of losses and things like that. But right now it's a paper loss, it's not an actual loss. Many experts, again, all the experts that I've named have always talked about and pointing to the American market as always bouncing back, right? So even though things are bad, things always historically have bounced back and have become stronger than ever. I think I'm just going to kind of paraphrase this slightly. Well, let me backtrack, right? So the other notion is don't all of a sudden, because the stocks are low, that all of a sudden you put all your money into, let's say, Starbucks, because you think when this is all said and done that everyone's going to go back to Starbucks and be buying Starbucks, and then you're going to make all this money. So the notion there being that makes you a day trader, and day trading and kind of trying to what they call timing the market, 96% of the time does not work. And in fact, for that 4% of who it does, you have to really know what you're doing, and it's oftentimes not really repeatable. That same 4% that in the past, let's say 10 years, that actually managed to time the market, don't end up being the same people that correctly time the market the next 10 years and so forth, right? So the way to kind of gain financial freedom, people often talk about is having investments, right? And so that's what I'm really ultimately talking about. And investing really is about having a diversified portfolio. And well, how does that begin? Number one, you don't have mutual funds, instead you have index funds. So if you look at the S&P 500, that is a portfolio of the top 500 companies in America, and their performance. And so generally there's always a good return. There's always a return on them. It might not be high as if you got lucky timing the market, but it will give you a return. So my advice, and the advice of all these people, is always invest in index funds over mutual funds or individual stocks. So that's kind of the first thing. The second thing, don't time the market, and you're much better off just incrementally putting in money into your investments over time. So it's not like, let's say you make a ton of money, 1 month, and all of a sudden you're going to invest all of it, and that's how, that doesn't work. For me, I've been putting in about $40 every single week for the past few years into my investments, and slowly that has grown and grown. And there's this thing called compounding interest. So over time, it compounds into something larger, right? I mean, right now, this is kind of a sad thing, but it's an easy comparison of, the coronavirus, just a few people have it, but then as time goes by, all of a sudden more people, and it's that exponential growth, right, that you're probably seeing in graphs and so forth. Well, the same thing works with money. And if you just kind of put in, instead of timing it, just continue to put in money over time, it will actually build far greater. Now, the other component of it is that I think a lot of people kind of get caught up on is when you're younger, they say like, you can tolerate a higher risk. Well, that's false. And this is from my own experience as well, that, number one, you want to minimize the risk. You want to have astronomical high risk or low risk, high reward. So you want the least amount of risk, the highest amount of return. And you try to find those whenever possible. And, in that sense, people say bonds are too safe and so forth. Well, bonds might be safe, but, the problem is if you lose, let's say, 50% of your investments, it's going to take you, twice as much to rebuild that, to get back to that just starting number, let alone make more money. So, bonds, while safer and might not yield as much in general, are, I follow the Dalio all seasons portfolio, and you can kind of check that out online. I'll link to it in the bottom as well. Tony Robbins, Money Master the Game, talks about that as well. And it's really about this idea that having, like 60% or so in bonds versus stocks, because stocks, even the index funds that I was talking about, they're still riskier than bonds, and so you want to, by bonds, minimize your risk in general. So that's kind of a big component to it. So these are kind of the various things that I've been applying to my finances, and in this time of economic crisis, I'm ironically actually still doing well for myself. I actually have not suffered a loss, believe it or not. Certain individual things have gone down, but overall I have not. And if you read Tony Robbins, Money Master the Game, and if you like people that applied those principles in the 2008 crash, suffered losses of just 3%. I'd rather suffer a loss of 3% versus like 50%. So, and of course those people then, because they didn't try to time the market, they didn't become emotional and all of a sudden sell, they were able to regain back their investments, and their growth over time was fantastic. So these are just a couple of things, and if you have no idea what the hell I'm talking about, happy to answer any questions down in the comment section. But I would, if nothing else, this was my introduction to you of essentially just saying, hey, get out there and get the information. There's no better time to get your financial life in order than now. I know things are especially scary right now, but the more you understand how finances work, and especially investments and so forth, the better off you'll be. So that way you won't be rattled when these types of situations, because we might not face a crisis like that in our lifetime in this way, but there's going to be downturns in the market and so forth. Like, we cannot predict what is going to happen with the world, but we can prepare better for it by knowing various information. And the more financial confidence you have, I think certainly the better off you'll be in terms of stress and all these other things. Anyway, truly appreciate you taking the time to join me. Hope this has helped. Please share it with anybody that you think would benefit from this, and I hope to see you next time.